To raise money in Silicon Valley right now, make no mistake, you are stepping into a ruthless funding environment. During Y Combinator's Winter 2026 Demo Day, 14 different startups walked onto the stage, having already crossed $1 million in annual recurring revenue. Because early revenue is moving at this speed, the entry price for investors has risen in tandem. Standard seed rounds for top-tier companies now frequently clear $25, $40, and even $100 million valuations. With 90% of the cohort using AI, this is the standard point of entry. One hardware company reached $27 million in revenue in 6 months, moving past traditional assumptions about physical product scaling. With technical barriers shrinking and financial metrics moving this fast, a working product is expected. It is no longer a guarantee of a check. If $1 million run rate isn't a guarantee, what does predict success? An independent analysis tracked 5,000 YC alumni over the last 20 years to find out. This scatter plot compares demo day hype against long-term valuation. With an R-squared of 0.09, early buzz has zero correlation with billion-dollar success. Instead, a power law emerges. A highly technical founder will often design their pitch deck as a manual, dedicating slide after slide to explaining exactly how their features work. We see this constantly in the analysis of 373 recent AI startups. A founder will spend their entire presentation detailing a generic chatbot or a thin software wrapper, rather than explaining how that tool owns a complete workflow. When you force an investor to focus entirely on technical mechanics, you push their brain into a critical mindset. They stop dreaming about market dominance and start looking for reasons your code will fail. A deck that meticulously explains how a product functions will lose to a deck that illustrates what the market will become. Breakout founders use their slide deck as a conversation starter to spark the investor's imagination. Instead of highlighting isolated tools, they position themselves as agentic operating systems, platforms that ingest messy data, make decisions, and take actions automatically. This diagram shows that shift in strategy. Instead of pitching an isolated AI feature, the narrative expands to show total ownership over an industry's entire decision loop. Try the read aloud diagnostic test on your own pitch. Read it out loud and find the exact slide where you stop talking about market trajectory and start explaining button mechanics. That is the moment you lose the room. This chart illustrates the difference that early scaling signals make. Startups that reach this level of momentum are 46% more likely to hit the growth stage and raise 33% more capital on average. The capital exists. Venture funds have billions ready to deploy, but those funds only unlock when you get the investor out of the weeds and into a mindset of scale. Building this narrative sequence makes sense in hindsight, but when you are deep in the code, it is difficult to see your own structural flaws without expert pattern matching. That is why we created the VC-Ready Pitch Deck Kit. It provides the structural frameworks that breakout startups use to sequence their pitches. Inside, you get access to 16 VC-quality AI prompts embedded directly into the slide templates. These prompts guide you into a narrative sequence slide by slide, preventing you from falling into the technical trap. With lifetime updates and no recurring fees, this kit is an efficient way to structure your pitch. It allows you to stop defending the product you have and start funding the scale you've projected.